I am an employment counselor and litigator at McCarter English. Employment and labor is the majority of my practice, and it's what I love to do, talking with folks, whether you're a small business, whether you are thinking about starting a small business, all the way up to, some of our largest companies in the U.S. I counsel companies across the country on everything from executive employment agreements to wage and hour compliance, labor issues, and currently in the pandemic doing a lot of work on helping companies transition to remote work, figuring out how to do remote work, return to work, hybrid work options. There's a lot happening in the employment field, but I'm so happy to be talking to you today about some basic employment laws for emerging companies. And I am just working on navigating through my PowerPoint here so we can get started. Okay, so we've got our slideshow. So today we're going to talk about wage and hour compliance. We'll talk about employment classifications, traps for the unwary, and best practices for managing your startups. Because we are lawyers, I need to share with you that this presentation is for informational purposes, not legal advice, and the views expressed in this program may not be reflective of anyone else at my firm or its lawyers or its clients, but I'm happy to really give you a broad overview of what the most important employment issues are for startups to be considering, so that way you can have a path to really sort of focusing on your compliance for your business along with your business itself. So whatever stage you're in, whether you are just thinking of an idea that you want to bring to a business, whether you're actively focusing on compliance, if you've got a team, if you've got a payroll, or even if you're currently making it rain, this presentation will have really valuable information for you on sort of everything about the basics of the employment relationship. So starting off with sort of really a very basic question, which is what is an employee and what is an employment classification? Because when you're starting up a business, when you're very early stage, if you haven't raised capital yet, you may be working just with you and other founders. You may need to hire some help. And the question becomes, are we developing employment relationships? And generally, the presumption under the law is that anyone who's providing services to you or your company is an employee with certain exceptions. And so why does employment classification matter? Well, the employment classifications and employment status is really sort of what governs things like minimum wage, overtime pay, hours worked, benefits. And this is governed by a whole plethora of state and federal laws that are really sort of very, very complicated, interwoven, and can pose sort of a lot of traps or pitfalls for companies that are at very early stage. So we're going to talk today about, sort of how you can keep your employment relationships very basic and how you can take advantage of some tools that allow you to get help and get services before you're ready to start hiring your first employees. And so the broad question is, why does employment classification matter? Why does it matter to determine whether you're bringing on employees or maybe going to a staffing company or using consultants? Well, it's because that's the law, and employment laws carry really stiff penalties if they're not followed. So you always really want to be aware of what your compliance requirements are, because once you've got that in mind, once you know who your employees are, who your contractors are, and you've got great agreements and really great compensation, processes in place, that allows those things to work more automatically. It allows you to develop a loyal and productive workforce and contractor relationship, helps you avoid litigation, and allows you to really focus on what you do best, which is growing your business. So let's talk about sort of the different types of employment status, because there are a lot of words that are sort of thrown around, such as full-time employee, temporary employee, part-time employee, interns, freelancers, contractors. So under the law, we can really sort of put these statuses into two buckets. We've got sort of the employment bucket. These are your typical employees, whether they're temporary employees or regular employees, full-time, part-time, paid interns are also considered employees under the law. Freelancers, I've got a little question mark because that is a maybe. Okay, and then under the law, we also have independent contractors. These are true contractors, and we'll talk about what makes someone a true contractor. Freelancers can also potentially fall into the independent contractor bucket, and so we'll talk about what that means in terms of pay and agreements and so forth. And then what really falls into neither category is unpaid interns and volunteers. So volunteers really only applies to like nonprofit organizations, religious organizations, and unpaid interns, that is really a very sort of strict designation under the law. You may have heard that there have been many class action lawsuits brought by interns against publishing companies, Condé Nast, film and production and music production companies like Fox Searchlight. There have been a lot of suits brought by interns who typically are younger people who worked for free, providing services for businesses, sort of all in the name of getting experience. But the one pitfall that a lot of startups should be aware of is that there's really no such thing, unfortunately, as a free lunch. Unpaid interns really can only sort of exist within the parameters of sort of a college program for credit, something where an intern is really there to gain education rather than just providing services for a company to get experience without pay. So this should give you just sort of a really good visual of sort of these buckets of who fits into these different categories of employment status or independent contractor status. And so wherever you're operating, if you're in Massachusetts, California, if you're in Florida, Connecticut, wherever, it's really critical to know how your state defines employee and independent contractors. And that's because there's some federal employment laws, but a lot of employment law is governed at the state and local level. And Massachusetts has one of the toughest standards in the nation for employment and independent contractor status. So we sort of start there because if you can meet the Massachusetts test, you can pretty much meet it anywhere. And Massachusetts law provides that an individual performing services for you, your company, your startup, even if you're very small, they're presumed to be an employee unless three factors are met. All three parts of this three-part test here need to be met. The individual needs to be free from control and direction in how they perform their service, and that needs to be both under the contract and actual, in fact, in the way the work is carried out. They need to be free from control and direction, meaning they're given a project and they're totally free to go and figure out how to accomplish that project. You've got a startup and you want, sort of a website built just to, advertise their services. You hire a web developer and they have, sort of total freedom to figure out how to get that done. The second part of the independent contractor test is that the service must be performed outside the usual course of the business of the employer. So what that really is getting at is we want independent contractors to be independent. They're not doing the actual work of your company. So let's say, for example, you have a company that has a mobile app and you deliver meals for local restaurants, okay, sort of like an Uber Eats or a Postmates or something similar, but maybe you're have an unusual model, and this is your app. Let's say, for example, you build the app, you've got everything together, and then you want to hire a marketing firm to, place social media ads. That person might be an independent consultant because they're not sort of performing the core functions of your business. Let's say you are hiring an HR consultant to sort of advise you on employment practices. That person would be a consultant. But let's say you are hiring an engineer to sort of tweak your app and sort of, figure out how to improve your business. Or let's say you're hiring someone to take care of your marketing or your sales. Those people are performing the integral functions of your business and would be performing within the scope. Those would be more like an employee. The last requirement for an independent contractor is that the individual must be engaged in independent trade of the same nature that the service is performed. Essentially meaning that the individual must have their own independent business where they do that type of work for a lot of different kinds of people. If you're hiring someone to maybe work on your app or work on your customer service for 40, 50 hours a week, they're more like a full-time employee. But if you're hiring, for example, someone to be your HR consultant for 5 hours a month, and they do that service for a lot of different people, then they're engaged in that independent trade. So when you're thinking about, I want to bring somebody on board to help us out, look at this 3-part test to really figure out, okay, can I meet all of these, in which case this person's an independent contractor, or if I'm not meeting all of these, this person is more likely an employee. And this test can vary state by state. Some states are easier to satisfy. Connecticut's easier to satisfy. California is really not. So it really does vary from state to state. But in Massachusetts, you want to be really sort of careful about this. This chart gives you just sort of an overview of what is different about the compensation and benefits for employees versus independent contractors. So you'll often hear of employees as W-2 employees, independent contractors or 1099. That's just sort of the different tax forms that compensation is reported on. And so employees are entitled to minimum wage and overtime for non-exempt employees. There are other requirements for employers. There's state and federal income tax withholding, contributions to FICA, unemployment insurance is required in almost all states, including Massachusetts. Workers' compensation is as well. So there's a lot of additional sort of costs that are involved when you're bringing on an employee, and benefits, of course, is one. All of those things are not really involved in the independent contractor relationship because that person is operating their own independent business. But this chart just sort of gives you a broad overview of what are some of the obligations for employers to keep in mind. And we'll talk in a little bit about some strategies to kind of manage those obligations and make sure that you're doing things in the correct way. We'll also talk about some strategies where if these types of things are not things that you have funds for, what are at the very early stage, what are some ways around it? So another key component to the employment relationship is that when you've got an employee, you need to be looking at your minimum wage, overtime, and exemption requirements. And what this means is that federal and state laws require that your employees be paid at least the minimum wage. In Massachusetts, it's $12. The federal minimum wage doesn't apply here because it's the higher of the two that is applicable. But the federal minimum wage is $7.25, and that's also the state minimum wage in some states throughout the country, particularly the Midwest and the South. So that's the minimum wage, and the other requirement is that non-exempt employees must be paid overtime. So if anyone works over 40 hours in a week, we're paying them both their hourly rate and a premium. They get time and a half for all of those hours that are worked over 40. So state and federal law provides an exemption for exempt employees. And so exempt employees are often called salaried employees, but that's not the only that's not the only requirement for establishing an exemption for overtime. So exempt employees actually have to meet a 2-part test. They must both have meet the duties test, meaning that they must be a bona fide executive, administrative, professional, outside sales, or certain computer employees. And so in addition, if they do fall within one of those categories, and those categories are defined in detail on the Federal Department of Labor's regulations. You can easily find those. If you're interested in learning more about those, you can reach out to me. We could spend days and days and days just talking about employment compliance, and we could spend a whole hour talking about exemption. But this just gives you a broad overview of what an exemption means, because I want to make sure that everyone knows that it's not just the salary component. The employee must also meet a duties test. And those duty tests really kind of sort of say that typically white collar and non-manual labor, those can fall within the exempt provision. Anyone who's performing manual labor, more blue collar work, those are typically non-exempt, and those folks must be paid overtime. And so the second part of the exemption test is compensation. And compensation means that the employee must be paid on a salary basis. Currently, the salary as of January 1st of this year is now $684 per week. It's about $35,000 per year. Some non-discretionary pay can be, counted toward that salary threshold, but you want to be really sort of careful in how you structure that compensation to make sure you're paying at least the minimum in order to create that exemption from overtime. So now that we talked about sort of some of the broad issues of employees versus independent contractors, exempt versus non-exempt, let's talk a little bit about some of the traps for the unwary startups. Okay, so the Massachusetts Wage Act, and this is why it's so important to really be keeping an eye on compliance at the same time that you're focused on building your business, is it governs the payment of wages in Massachusetts. It has among the heaviest penalties in the country for violations. It is an absolute hammer. So what it does is it requires timely payment of wages when they're earned, and unpaid wages then can result in a tripling of damages. So if you, for example, owe someone $3,000 in wages, you weren't able to make payroll, they leave the company, you still haven't paid the wages. Under the Massachusetts Wage Act, if they bring a claim, that $3,000 is automatically tripled to $9,000. It's a very heavy penalty because the state wants to make sure that businesses are planning about their payroll, ensuring that people are being paid wages, because when they're not, then they're filing for unemployment or causing other issues within sort of our workforce and economy, right? So the Wage Act also requires payment of attorney's fees. Our state law provides for 12% interest. There are a lot of really heavy penalties. So that's another reason that we want to make sure that our employees are properly classified, independent contractors are properly classified, because if we've got it wrong, that can also require back payment of tax and insurance contributions. So all of those things can add up very, very, very quickly. It's also really important for founders and owners of startups to know that there's potential individual liability for company presidents, treasurers, LLC members, and certain managers. So if you're one of those positions, or if you're responsible for paying wages, you can be individually liable. That's a very unique component to Massachusetts law, and it has really sort of been effective in making sure that wages are paid. But it's something that as companies are very small and grow, really need to be aware of. Of course, there's potential civil and criminal liability for claims investigated by the Attorney General. Okay, the federal law and other state laws carry similar penalties. They are sometimes less severe than Massachusetts, but no matter where you're operating or where you're hiring someone, you want to be keeping an eye on those compliance requirements. So a couple of more traps for startups that I see very often, and a couple of tips to help you navigate around them. So the Wage Act also applies to very highly paid employees and even early employees with heavy equity stakes. So a lot of clients will sort of come to me and say, look, we really don't have a whole lot of funding. We haven't raised money. I'm using my personal savings. I really need to hire, a salesperson. I really need to hire a developer. Can I just, pay them in equity for right now? And so if you're bringing people on who are essentially employees, and don't recommend that you compensate them only in equity. I know it happens out there. I can't, advise you to do it because it's really hard to kind of fit it within the requirements of the law. So that's where you really need to be careful about sort of who you're hiring and how you're hiring, how you're exiting relationships, and so forth. So if you've got somebody that you want to bring on and give them a really heavy equity stake, Can you pay them minimum wage? Can you pay them at least minimum wage for what they're working? So that way, and overtime as well. So that way you're complying with the minimum requirements of the law with as little out-of-pocket expense as possible. Another trap is that deferral of wages, even if it's voluntary, even if it's your, like number 3 employee, your vice president of sales, somebody who says, I'm willing to sort of defer my wages, that is not permissible under our wage law. As we said earlier, our Massachusetts wage law requires that wages be paid within 6 days of the end of the payroll period, of the period of time where they've been earned. So we never want to defer wages. The way we can work around it is that if you anticipate cash flow and payroll issues, what you can do is think about pairing incentive pay, end-year bonuses, annual bonuses, opportunity to, earn equity grants. Consider pairing those with either lower salaries or lower hourly rate to minimize sort of the burden on your cash flow, during those periods of time when you're working to raise capital, but still needing work to be done by your employees. Another trap is that bonuses, commissions, incentive compensation, they all actually are different things under the Wage Act. They're different forms of payment. They can have different payment requirements. So you want to learn the distinction as you're setting things up, and you want to make sure that any plans or commitments are in writing. If things are discretionary, like bonuses, you want to make sure in writing that you say that they're discretionary and when they're payable. If commissions are going to be earned, you want to make sure you set up that structure as well, so that way there's sort of no room for dispute later on. And another tip is that compensation issues often arise after the employment or contractor relationship has ended. So you're working together, you're thinking everything is going really, really well, we're doing, fabulously, maybe we deferred wages at some point, but everybody's on board because we really want this company, this idea, this startup to be a success. But after that relationship ends, and sometimes it's really hard to predict how and why that might happen, that's when compensation issues can arise. Like, oh, during that period of time, I was working 50 to 60 hours a week. Should I have gotten overtime for that? Or, oh, there was that time that we deferred wages and I don't think I was, paid in full for that. So you really want to make sure that you're managing hires at the early stage very carefully, and you want to make sure that you're managing exits very carefully as well. And that can include, documentation, that can include separation agreements with releases of claim. As you grow and develop more employees, those things may be more necessary, but always sort of keep an eye on how you're managing those exits. So some best practices, we've talked about a whole lot just really in the last 24 minutes. And like I said before, we could talk for days and days and days. I love working with companies and figuring out, okay, what are your goals and what are your challenges? How can we, help you build your workforce and your contractor relationship to help you grow your business? So we could talk for days about it. But in light of sort of all we've talked about today, about employment classifications, potential risks and traps, here are some best practices for you to keep in mind both now and as you're growing. So take a look at how you're using independent contractors to make sure that you're correctly classifying them. You also want to develop appropriate independent contractor agreements that spell out that the relationship is an independent contractor relationship and that it will actually be performed as a contractor relationship. You also want to look at, as you're growing and bringing more people into the fold, developing a company policy around hiring for independent contractors. So that way you can ensure that you're being consistent. If you've got employees and if you've already got a payroll going, you want to audit your company organization chart or roster to ensure that you're classifying people as exempt and non-exempt correctly. You can do that by developing job descriptions and comparing them against the Department of Labor exemption requirements. You also want to, as you're growing, develop offer letters, employment agreements, non-disclosure agreements for each employment type because they can sort of vary. Consult with employment counsel as needed on these questions. And for smaller organizations, you might consider outsourcing all that administrative stuff, things like payroll, workers' comp insurance, unemployment insurance, developing your policy and your employee handbook. You can outsource those to a professional employer organization, and they will actually hire your individual and place them in your organization. So you're like a joint employer with the PEO, but the PEO takes all of the administrative duties and obligations. Lastly, if you need to lease employees temporary, whether it's for a couple of weeks for a project or whether it's for 6 months, you could lease temporary employees from a staffing company. Again, the staffing company hires the individual, takes care of all of those administrative duties, and places them at your location, but that staffing company is then serving as the primary employer, and you've got a very sort of defined employment relationship and less administrative work for you to be doing on the back end. And so as you grow, things to keep in mind are that there are applicable leave laws. Things like FMLA, they don't kick in until you've got 50 employees, but there are some other leave laws that might kick in once you have 6 employees and 10 employees, depending on the state. You always want to sort of keep an eye on compensation reviews and pay equity, especially as your payroll grows. And as you're growing too, developing organization policies around handbooks, harassment and discrimination prevention, diversity, equity, inclusion, really important to both sort of developing a workforce that has inclusion and collaboration, but is also legally compliant because these things are mandated by certain state and federal laws. Always keeping an eye on the security and protection of your company inventions, trade secrets, and confidential information for both employees and independent contractors. From your top level employees all the way down to your interns, you want to make sure that you're protecting your company assets. And also benefits are not something that we really have time to talk about today, but are things that can be required. For example, fair share for health insurance and other types of insurance can be required as you're beginning to grow. So I hope this has been helpful. I'm going to take a look at the Slido to see if we have questions, but you can certainly feel free to reach out to me. I'll be on the Slack later today, so you can find me there, and you can also reach out by phone or by email.